All right, I think that I am live. Somebody message me if that's the case. Anyone? All right. Okay. Hi, everyone. So my goal for this evening is not full of my room up somewhere. I can hear myself on an echo. Give me a second to work this out. But my goal is to not make a complete and utter fool of myself. So there's going to be a learning curve. I'm sure I'm going to get things wrong, but hopefully I'll get better over time. All right, I think I found the tab that was the offensive tab. Okay, so the way that I want this to go this evening, hopefully, is first of all, thanks for everyone for being here. I appreciate you all very, very much. Um, am I nervous? Not really, a little bit. Just because I've been on, lots of other. I've streamed live before, but I've never actually streamed live just by myself. So I guess I'm a little nervous for that, but not particularly nervous. Um, for the most part, I want this to be a Q&A. There's plenty of things that I could talk about. There's plenty of things that I could probably fill the time just chatting by myself, but I'd rather just field questions and kind of respond to what you guys are most interested about. So if you have any questions, let me know. Ooh, this is interesting. So this is the first time I put up comments and stuff. So thanks, Tanner. Okay. Apparently I let Tanner in. I am not going to answer this question, Marvin. But yeah. Okay, we'll start off. This is a good one. So we'll start off with it's just thoughts on the recent quarter. So I'm actually pretty enthused about almost everything. I've been back and listened to the call a couple more times. Well, I've listened to the Q&A about 2 more times, and then the prepared remarks 1 more time after this morning. This morning I was a little bit distracted because I was trying to tweet at the same time that I was listening to the call, so I didn't listen that carefully to all of it. I'm actually more enthused after going through the call several times than I was earlier on, because I think that there's a lot of things that are there's even more things positive than I noticed when I first went over the numbers. Obviously, the lending platform business is a big part of that. The fact that they're getting so much more capital light revenue. So when we first kind of looked at things this morning in the live stream, the financial services revenue, we saw that it was a big beat, but we didn't parse out just during that hour while we were trying to kind of get through everything why that was the case. And so, but having heard about the lending platform and then comparing it, the originations there to the originations that, for example, Upstart has and that Lending Club has on their marketplace, got me pretty darn bullish, because they haven't really done this type of thing with their lending platform before. And the fact that they've been able to ramp it so quickly is really, really awesome. The lending, I'm glad that they're reaccelerating lending, because the convertible note deal from earlier this year, entire purpose of, well, not the entire purpose, a big portion of that was to free up a lot of capital. I'm glad that they're using that capital, because if it's just sitting there, it means that the dilution that was paid for it isn't going to work. Isn't not going to work in that way, but isn't working for the business. So if you're using the capital, then you're generating a return on that. So I'm glad that they're kind of leaning into lending. They've got plenty of room on the balance sheet. Obviously, the the loans are performing really, really well, and so they're generating good returns. So overall, I'm actually more enthused the more I look into the numbers. There is this question from Flash, which is a good one. So how do I feel about the tech platform getting kicked down the road as it relates to the fundamental thesis of the company? It's not good. The tech platform has been a disappointment relative to where I think everybody thought it would be at this point. And the main reason, well, they've given lots of reasons. At this point, I just think that the tech platform is it's in a holding pattern, which I don't like that much. After listening to Noto's comments on, I can't remember if it was the Bloomberg interview or the CNBC one, he talked a little bit more about how these deals are just getting kicked down the road, and they're not closing on them like they thought they would, and that's why they lowered the lower end of the guidance, but they didn't lower the top end because those deals could still come through. There's the uncertainty with the election. There's still, I think some people are probably still waiting um, on what happens with rates to get confirmation of, and then setting their budgets for next year. So we'll see. I said that I was going to give it basically until this quarter to really pass judgment on the tech platform. There was a little bit of growth quarter over quarter, but it's not what it needs to be. If the overall business is still, so if the tech platform still enables the business to operate in a way that's leaner than their competitors and gives them an advantage as far as unit economics on everything that they offer because they own the technology in the background, and that leads them to be able to innovate and leads them to be able to grow the business at a 30% year over year rate like they did this quarter. I think that that's still really, really positive. Like I would take that, honestly. I would take the tech platform growing at 10 to 15%, but the entire business growing at 30% for the next few years. Like I'd be okay with that. Obviously, you're not going to get the same type of multiples and excitement as you would as a SaaS stock. But overall, I think fundamentals are what matters. And it doesn't matter exactly where the fundamentals come from. Obviously, I would like for the tech platform to take off. They've talked about having financial services, lending, and tech platform being a third. I think that that's really aspirational at this point because the tech platform is so far behind and because financial services is growing so fast. So I'm not thrilled with the anemic tech platform growth. I do trust that management is telling the truth when they say that they haven't lost any of these. I also don't know, just in general, this is just me speaking off the cuff. I've got no sort of information on this. I'm not sure. So I do think that the tech platform is a unique offering that SoFi has in that they have a bank charter, which no other company that offers these types of services do. And so there's probably some cachet that comes along with that, where the potential customers that are coming to SoFi and they're coming to Galileo can look at the tech platform and know that since it's operating at a fully regulated nationally chartered bank, that it's going to be above board. I think that the Synapse failure will probably be a long-term tailwind because people will be worried about regulations and compliance, and that plays to Galileo's strengths. But I'm not sure if it's really differentiated as far as the tech goes, and I don't operate in this space, right? I work in a completely different industry, and I don't know if the product's really differentiated on a product basis, and so I would think that if they are differentiated, they will win a large amount of these RFIs and RFPs. We'll see. Hopefully that kind of answers that question. I do hope that again that I do think that it does make them leaner. I think that it gives them better expenses, meaning that they've got less expenses because they own the tech in-house, and that it's only kind of a net benefit to have the tech platform. But at the same time, you really do want to see if they want. It was interesting. They didn't say. I don't think they said AWS a fintech at all during the call today, which that's kind of what the tech platform was supposed to be at some point. So yeah, hopefully that answers your question. Um, let's see. What other questions do we have? Here's one. So JPM price per shares is 2.28 currently. SoFi is over 4. SoFi needs to show tech platform growth. Otherwise, current SoFi valuation isn't too bad, right? Tech platform is so disappointing. So we'd already talked about the tech platform. I actually think a price to sales of 4 for this company is really, really low. Considering the fact that it has gross margins in like the 80%, if you talk about GAAP gross margins, they're in like the 80% range. And sorry, I'm pulling up like my spreadsheet for kind of price to sales. If you look at price to sales, it is on the lower end of other fintechs. So for example, Hood has a price to sales. Let's see if I can calculate it real quick. So Hood's price to sales on a trailing 12-month basis is 13. Even Affirm's is 7.6. And SoFi's gross margin is 80%, whereas Affirm's gross margin is around 60%. So they have higher margins. And again, Affirm is not profitable yet, whereas SoFi has been profitable for 4 quarters. Upstart's price to sales is 8. Like Encino, which is kind of a banking as a service company, and it's a banking as a service company that's only growing 14% year over year, or 14 or 15%. So the same rate as Galileo. Their price to sales is 9. So I actually think that, again, I think SoFi is undervalued here by at least by approximately 50%. Like I think it probably should be trading at about 20 plus. So hopefully that answered that question. Let's see what else. Ooh, there's a question from Zach. I haven't even read it. So back in the day, Zach from South Dakota was on Reddit, and we used to chat a bunch. So how do you see financial services growing in the short to medium term after today? I think the lending, this lending platform still has a lot of room to the upside. I think the coolest part about it, what gets me so enthused about it, is that it allows them to open up their credit box. So SoFi's always had their target market, which is Henry's, right? High earner, not rich yet. So young professionals who are high earners, call them 6 figures plus, but don't necessarily have the business relationship or the banking relationship that they want. And so that's been their target market. That's one of the reasons that they got into student loans, that they focused on student loans so much in the past. And so they've kind of been locked in a little bit. Now, those are obviously, I think those are the most valuable customers to have, because those are the type of customers that grow with a bank, that grow their assets, that grow and that need brokerage, and then they eventually need a mortgage, and they can cross-sell and all of these things. And so if you get them young, and you get them in the platform, and the platform is really good, like the SoFi platform is, then you can keep them, and their long-term value is really high. But one of the things that they miss out a little bit on that strategy is that that's a little bit of a narrow band as far as the total addressable market, right? Not everybody makes 6 figures. And so one of the things that I kind of like about the lending platform business is that the people who they do originate these loans for in the lending platform business are the people who then who are outside of their normal credit box. So they talked about it a couple of times on the call, that these are incremental to the loans they would have underwritten if they were just left to their own means, right? If they were just using their own balance sheet. And so I really like it in that those people, so even though the loans themselves, they have zero balance sheet risk. So they're not holding the loans. They immediately transfer them within a week or so, or a couple of days, to whoever owns them. There's no risk sharing agreement, but the loans are serviced by SoFi, and those people who have those loans are now SoFi members, because that's the payment portal that they have to use to pay back their loan is through SoFi. And so it allows them to kind of move a little bit down market and expand the type of people that they're working for, because at some point they'll be at 10 million members before the end of this year. And I don't know how big the cohort is of people who are call it under 40, between the ages of 20 and 40 years old and make six figures, but that's kind of their target market. But there's a limited amount of those. And so at some point to scale the business, I think that they'll have to expand some of their products. This is a great way to do that without taking any balance sheet risk on those people who might have lower FICO scores, or who definitely have lower FICO scores, because they say these are people that otherwise wouldn't underwrite. But it still gets them in the platform. It allows them to, have a SoFi checking and savings account, have a brokerage account, maybe build their credit up to the point at which they would be able, or they would qualify as kind of your more typical, and it helps them get their money right. So I actually really like it. I think that in the short to medium term, that's probably going to be the big one. Credit cards and Invest are the ones that they highlighted as the next ones that they're trying to scale. He talked about, Noto said something about how Invest, they could monetize it by an extra 100%. But right now, the brokerage only brings in like less than 1% or around 1% of revenue. I haven't checked this quarter. That's what it has been in the past. So even if they double it, it's only like 2% of revenue. I think the big thing that could drive growth there is credit cards, but they have to get it right. And they're not really scaling it yet. But I think that the loan platform business took everybody by surprise. Like none of us had it really on our radar. And from the call, it sounds like none of the Wall Street analysts had it on their radar either. But I think it does have a lot of headroom because they have so many members, and because they reject 80% of the people who apply for personal loans. Now I understand why Tanner always has a water bottle with him. I'll do that in the future because I'm starting to get a little parched. Let's see. Oh yeah, I'm supposed to do this because now this is a YouTube thing. Make sure to like and subscribe. And again, thanks for being here. Let's see. Here's one that's kind of quick. Did they adjust their 2026 guidance? No, they reiterated and said that they were confident of their 3-year guidance, is what they called it on the call. I actually think so. On the second part of this question, how has the recent earnings changed how you see SoFi performing in 2026? It just kind of takes the pressure off of the second and third years, because if your revenue growth, so let me pull this up and I'll get the numbers right. Give me a second. So when I did a little while back, I kind of modeled out how they would get to their guidance of 55 to 80 cents of EPS in 2026. And the way that I had it modeled, the simulation that I had, it had 17.4% revenue growth in 2024, followed by 31% in 2025 and 29% in 2026. And that got it to about 62 cents of EPS. And so, but since they are executing better and increasing because the business is going to be bigger in 2024, it takes pressure off of 2025 and 2026 to have such high growth rates. So if you up that to call it 22%, now you probably only have to grow, instead of growing, call it 31 and 29%, now you only have to grow probably, because you're building off of a bigger base, somewhere around a CAGR of 27 to 28% for both years. And so it makes it easier and much more realistic for them to achieve those targets. And then my own projections, so the ones that I think that they could hit, had them getting to about 78 cents of EPS, and that was with 20% growth this year, 38% next year, and then 29% in 2026. And 2025 growth at 40% is a decent stretch. That was assuming a pretty decent bump in lending, but lending's already higher than it was. Now, the tech platform is obviously behind. and hopefully can still catch up. One of the things that I did also notice on the tech platform is last quarter, when they talked about the tech platform, they said we're lowering guidance for this year, but we're not necessarily lowering guidance um, or we're not lowering our long-term guidance. They didn't repeat that this year. That doesn't necessarily mean that they are lowering their long-term guidance, because they said that they would CAGR at, I believe it was mid-20s% over the next 3 years. But the fact that they didn't reiterate it means that it's probably on the table. Let's see. This is another good one from Rumi. If tech platform isn't a thing, what's most of SoFi just execution of traditional banking services? Yes, and but they can also expand into other verticals. So SMB banking, right? So small and medium businesses. But the other thing that they talked about on the call that I didn't notice at all the first time, but going back through, I heard it a couple of times. And the second listen through, they talked about SoFi Protect, which is their insurance, and they said that they had 2 partners now that are kind of native to the platform. I don't know exactly how that works. I'll have to like dig in and play around with it on SoFi's website, but it sounds like it's kind of a white label thing where you can actually get it used to be that like you'd click for insurance and they would just send you out to another platform to get it. So it would just be referral fees. It now seems like they've got 2 that make that are more integrated into SoFi's product suite. And eventually, right, they've said in the past that they want to get into insurance as well. So you can, I mean, again, that's kind of, it's not necessarily a banking service. And then I do think that there's lots of unique things that they can do. I mean, look at Robinhood. Robinhood's made a lot of innovative products just in their space. There's things like that nobody has on their radar right now, like the lending platform that came out of nowhere, and all of a sudden it's at a run rate or it contributed like 61 million to revenue. So there are lots of things that they could do in the financial and innovate in the financial sector. They talk a lot about these types of things, like different ways to do buy now, pay later, different ways to help people coordinate all their payments, subscriptions, etc. I mean, they talk about a lot of these innovative products in the Galileo FinTech podcasts, because they talk about some of the fun stuff that they're doing with their partners. And a lot of those things they could bring into SoFi and make it a much more modern and easy to use. But I don't think that the tech platform is going to be nothing. I just personally want to see the growth before I get too excited about it. I do think that they've got a differentiated product, but the execution hasn't been there, and it's hard for me on the outside to say how much of that execution is because, or lack of execution is because the product isn't good enough, and how much of it is because banks are just not willing to invest right now. Because again, if you look at, so for example, Encino, right, that other company that I talked about that does banking as a service, they're only growing in the mid-teens year over year as well. And so it's not, and it's really hard, at least for me, to figure out exactly what the market share is. And hopefully, I've been asking pretty much every time that there's like an investor Q&A, or in one of my calls with Crystal Point, I mentioned the fact that, or I think in 2 of them I brought it up, where it would really help investors, I think, if they publish more on the tech platform. So hopefully that answers that question. So if I came public as a SPAC, does that impact valuation and sentiment? I don't think it does anymore. I think it's been long enough that like all the SPAC nonsense is far behind us. And I get like, there's probably still a little bit of a stigma, but I think at this point it's far enough back that the fundamentals of the company should drive the price action more than whether or not it came um, public via spec. Let's see. What do you think led to the record number of member ads at 750K? That is an unusually high number. I think so. I think Roy was probably so. The third quarter is traditionally pretty good. It was really good last year. I thought more of that was probably due to the Taylor Swift thing. Um, Football season starting, which is helpful. I think student loans, the fact that so in school loans, I think probably bolstered um, their numbers this year because those would probably be new product people. I do think the lending platform probably helped because it expanded their credit box, and so those people. So there was $1 billion of extra loans originated in the quarter that otherwise wouldn't have been. I have to assume that some of those went to new members, and that excuse me, that otherwise wouldn't have become new members because they got the loan and now they're SoFi members, even though SoFi doesn't own their loan. I think in the past, Noto said at one point that about 30% of their personal loan originations come from cross-sell from existing members. So that means that a lot of the new loans that they do give out are from new members. So I think that was a bit of a tailwind. And then their marketing just seems to be getting more efficient overall. I think that they've learned where to spend their dollars that get the most bang for their buck. Sales and marketing was up this quarter, which is really to be expected because sales and marketing does scale with personal loan originations because the customer acquisition cost for a personal loan is higher than their other products. So that was expected. But that also then leads to greater revenue or greater membership numbers. And so I didn't think that completely through when I was making, so I only said that I expected like 675,000. I think that the lending platform helped. I think that in-school loans helped, and then the NFL coming back also helped. Here's another, so good question from Marvin. What SoFi products do I use? So I use SoFi Money. I use the brokerage. I use SoFi Relay. I have a SoFi credit card. I have the 2% cash back. I'll pull it out real quick so I can prove to you that I'm not lying. So there's my credit card and there's my debit card. Let's see. I don't have any loans from them. I personally don't want to get into debt for anything other than a house ever. I'm just conservative that way. So yeah, those are the products that I use. I really like Relay, especially since Mint died. So I used to use Mint as kind of a financial aggregator, and then it got discontinued. So now I use Relay quite a bit. Yeah. So those are the products that I use. I don't think so. This is with regard to probably the insurance question that, or the SoFi Protect that I was talking about earlier. Acquisition of Novo or Lemonade on the card. I don't think they would. So Lemonade. Let's see, what's Lemonade's market cap right now? Their market cap is 1.28 billion. You probably have to pay a pretty penny to acquire them. It would be they probably want to build something smaller. The way that SoFi typically does these things, it seems like for the most part, is with small acquisitions. The tech platform is different, right? So both Galileo and Technisys were bigger. But when, like what they did with mortgages when they acquired Wyndham Capital, I think that that's probably more along the lines of something that they do with insurance, is that they build it up slowly, make it kind of a smaller acquisition, and then eventually get there. I've done some due diligence on Lemonade. I haven't done a lot. I like them from what I've heard, but I haven't done enough to really know that much about the business, honestly. So I can't speak to that, but I just don't think that an acquisition that's that big is on the cards. And by the time that they actually get around to, so the other thing is by the time they actually get around to doing an insurance like becoming the primary on insurance, I think we're probably talking 3, 4, 5 years down the road. And at that point, anything that's big enough today will probably be too big to acquire unless it's going out of business and available at like cut rate prices. Because I think the product timeline or the product roadmap, I would guess based on what they've done in the past, that credit cards is the next big thing. They're going to make sure that they scale properly. I would think that either international expansion or probably the next one after that would be small and medium businesses. And then after that, and each of these are going to take a couple of years to really get up and running. After that would probably be insurance or international expansion. So I think it's still a few years out, and I don't think that they'd acquire a company that big, but I could be wrong. That's just my opinion. Man, Marvin's full of questions. I actually don't know the answer to this question. It's in the 10Q. They haven't monetized it very well. And they are they're trying to compete for a different demographic than Robinhood. They're trying to compete with people who I think are more passive investors, which, like it or not, that's kind of what they've decided their path is going to be. So this one, do you think SoFi will drop 2025 guidance next quarter? Yeah, absolutely. They always put their full year guidance in their Q4 earnings. I don't know if this is how SoFi integrates partner or investor specific risk models into its platform to originate loans, and how this enables capital light operations, so that they reject 80% of their loans from themselves. I don't know at this point. So, and then what they do, this is my understanding, so I might be wrong, but so based on what we heard today, that's the most we've ever heard about this business. So, but based on what I heard today, what it sounds like they're doing is that they coordinate with, say, Fortress or one of these the other companies that they've got these agreements with, for the type of asset that company is looking for and the type of returns that company is looking for. And then they build that into their credit model so that when they reject it internally, then they run it through kind of that extra screener before sending it out to somebody else. And so that allows them then to, the reason that it's capital light is because it's just a fee up front. So they're getting paid because, so if you're Fortress, you could attempt to go out and get these types of assets on your own, but SoFi already has all of the back end to be able to service the loans. They've got the back end to originate the loans. They've got the marketing already that is bringing these people in the door. And so if you're Fortress, it's easier to leverage a company like SoFi to give you these types of assets at scale rather than to try to build it yourself. And so they're kind of working. So SoFi in this case is basically working as a third-party vendor. And so the reason it's completely capital light is they originate it, they give it to, I'm going to use Fortress as the example because that's the only name that we actually know. But they give it to Fortress within a couple days or a week. So it's completely 100% on Fortress's balance sheet. And then Fortress pays them based on this quarter, right? And they did say that the take rate will fluctuate, so the percentage that they get off of these deals will fluctuate. But this quarter they did $1 billion of originations this way, and they made $56 million inside of the financial services referrals. So call it 5.6%. So that they originate $100 million for Fortress. They take $5.6 million of that, and that's how it's capital light, is because they have that as cash right now. They have no balance sheet risk whatsoever. They didn't use any of their own capital to originate the loans, and they're being held completely on somebody else's balance sheet. And then they also get ongoing revenues, which is great. So as long as those loans, as for the life of those loans, they have the servicing rights, which means they get just a small percentage of each payment. Is Tevis feeding me answers off the headset? Maybe. You'll never know. Let's answer some so Marvin has like 1 billion questions, but I'll answer some from other people. Maybe I'll get to I'll scroll down quite a bit. We'll see. Let's see. there's any. Most of these are you guys just. I intentionally put it so that my card number was on the back, but nice try, Zach. What will be SoFi's PE next year? That will depend on its price, but I'll tell you what I expect for earnings. So I don't necessarily do price targets. I think that its earnings are going to be upwards of around 40 cents per share next year. Now, its forward PE right now is not that high, and actually something that I haven't looked at yet, but would be interesting. Let me see if any of this is up on Koifin as kind of we're talking. So one of the things I'd like to know is whether or not the analyst estimates have already been revised. So there have been a couple of analyst revisions or of analyst price targets that have come out. So I wonder if they've changed at all in the last day. Oh yeah, interesting. Here, let me see. I've never done this as the person, but I think that I can just do it this way. Share screen. Okay, so hopefully, oh yeah, you guys can see this. So if you look at this, these are analyst estimate, quarterly estimate trends. Okay, so this is how much analysts think is going to come in fourth quarter, first quarter. Can you guys see this? It's probably really, really small, isn't it? Can I zoom and enhance? We'll try to make it, no, this, here, we'll just do it that way. Okay, hopefully you can see that. So this is like what analysts expect for revenue in Q4, in Q1, Q2, Q3, right? So this is the next, call it 4 quarters. And you can see all of a sudden, so this was yesterday. Yesterday, the analyst estimates for Q4 were $640 million. Now, not even every analyst has updated their estimates yet, but it's already jumped to 680 million. So it's like a $40 million jump in what they expect. And you can see similar jumps. So Q1 hasn't jumped as much. They actually only expect currently 668. But a similar jump for Q2, call it a $20 million jump in expectations. And for Q3, now you're looking at almost a $40 million jump in estimates. So analysts are already coming out and adjusting this higher, which means that the forward price to sales is gonna come down. I wonder if, so you can do the same thing for GAAP EPS. And again, you can see the same thing happen, right? So analysts were expecting 3 cents, it's up to 4 cents. These are just average analysts, right? And these probably over the next couple of days, as more people come out with their price targets, I would assume that it will go up. So this one, went from 4 cents to 4 cents, but that's a rounding error. 7 cents to 7 cents. Let's see, 8 cents to 9 cents. So analyst expectations are already coming up based on what we saw in this quarter. But analyst estimates for the entire year, so if you go into years, right? So analyst estimates for next year is 26 cents, and 2026, when they're guiding for 55 to 80 cents of EPS, is only 47. I expect somewhere around 35 to 40 cents of EPS next year. Now, I don't think they'll guide quite that high because they always want to beat and raise. And if you guide that high, then you leave yourself less room to raise. But I would guess that when they come out with their guidance for next year, it's probably going to be in the low 30s range. Again, this is just me spitballing. But so there you go. And I do think, so last quarter, this is something I've just been thinking about today, but last quarter, there was a lot of concerns about the credit risk that SoFi was taking on. You had a couple of reports come out ahead of time that talked about net charge-offs and how they were going to be super high and everything. And I think it was really, really important that SoFi got ahead of that last quarter. And like, if you've read my articles, you know that. With this quarter, the quarterly call didn't have the same energy that the Q2 call had, but I actually think at this point, all they have to do is keep executing. Um, that the story will play out as long as they continue to just hit what they've guided for, and that as they do that, they'll the market will continue to re-rate them. So we're at this point, barring something unforeseen, I think that the stock itself is now trading up. It's making higher highs and higher lows, and I think that's going to continue as long as the execution happens. So, my personal opinion is that we don't see things like in the seven. Like we certainly won't get back to the sixes again unless there's like a big macro event. I could be wrong. I suck at price action, or predicting price action. So don't quote me on this. But my thought is that we're going to continue to see higher highs and higher lows, as we kind of move out forward. Okay, I think I'll take maybe one more. This is probably a good one to kind of end on. So Saint all night. Noto mentioned a year of tailwinds in 2025. What do you think will be the next tailwind? My thoughts on tailwinds is that actually it's kind of a slow roll of tailwinds. So that the fact that you don't want rates to come down too fast because that means that something broke in the economy. What you want is a nice, for SoFi, is you want a nice slow rate cut cycle where they cut 25 basis points every single time, or 25 and then skip one and then do another 25. And it slowly comes down to whatever the neutral rate ends up being. That would provide a nice, slow, steady tailwind for mortgages. It would, and student loans. I think personal loans are still going to stay just as big as they are now. If not, they'll continue to grow because SoFi will continue to have market share. And I think that the gap. So right now, what's driving a lot of personal loans is people refinancing for credit card debt and higher interest debt. And I don't think the delta is going to come down that. So the difference between what you're paying on a personal loan and what you're paying in credit card interest, I think that's going to stay big enough that there's going to be plenty of demand for personal loans. So I'm not worried about personal loan demand. The other thing that they actually said on the call, Crystal Point said it a couple of times. He said they have excess demand from both borrowers and from investors. And when they say investors, they mean people like Fortress who are looking to buy their assets. And so that's why they're expanding this. So that's the other reason that I think in the kind of shorter term, the big upside is fulfilling more of that demand and matching so that they, like SoFi, more than any other personal loan lender, has a marketplace that they can really leverage on both the buy side, so or on the borrower side and the investor side, because they have this ever growing pool of borrowers, because now they've got 10 million or 9.3 million members. It'll be 10 million by the end of this year. Whereas a company like Lending Club doesn't have that big of a pool of borrowers. So if I were to go if I hit, financial straits and I needed a personal loan, the first company that I would go to for that would be SoFi, because that's who I'm with as a member. I assume it's most for at least, and I would shop around and try to get the best rate for myself, but SoFi would be the first one that I would apply to. And if they were competitive, I'd do it because I'd rather keep all of my finances there. And so SoFi, like Lending Club, doesn't have that infrastructure, that platform where they're constantly bringing in a ton of new members, and then they can cross sell those members. And when those members are looking for something, they're looking for that. So I think member growth and cross sell is going to be continued tailwind. I think rate cuts are going to be continued tailwind. I think that one of the big things that will happen in the next year is that they are finally going to integrate all of their services on Technisys's banking core. And I think we'll see much more rapid innovation, and that we'll see a lot more unique products, things like the cash coach that they're talking about, once they've been able to fully integrate everything, because that's when they'll have full access to all of the data in one platform, and full access to be able to utilize that data in order to better serve their members. So I actually think that implementing the core and getting all of their products onto Technisys's core is going to also be a tailwind for the business, in that they'll be able to better monetize and also better serve um, their members. So anyway, I think I'll call it at that for my very first live stream. So I'm so grateful for all the paid subscribers and that got me to this point. I'm grateful that, like, this is fun for me, right? This kind of started off as a hobby, starting to write things for. I did it for Seeking Alpha initially, and then I didn't like the way that I didn't like some of the things that they did with publishing and editing and other things with Seeking Alpha. So I started the blog, the Substack. And then I set myself a goal. I said, if I get to this level, right, then I can justify more time and start a YouTube channel. So I got there. And it's been, I like that, like, it's been fun getting to know a lot of the community. And I think that this will help me kind of interact a little bit better with a lot of the people who follow me. So hopefully, yeah, we'll see. I hope to be able to, so I'll probably turn my articles into videos as well and do like a quick video synopsis. Not all of them lend themselves that well to it. But I'll probably do that. I'll try to do live streams as well. This one I think went well. We'll see what the feedback is from everybody kind of moving forward. But this is going to be an organic thing where I'll probably I'll do at least 2 either videos or live streams a month at this point. Hopefully build up to the point where I feel comfortable to, or have the audience to be able to justify doing it once a week. Yeah. And I'll continue writing. I really like the process of writing because it helps me to justify all of my thought processes and put it together in a cohesive narrative. So I'm not going to stop writing anytime soon, in case anybody was wondering. But yeah, thank you so much. Like and subscribe. It's weird to say that out loud. And thanks again. And I don't even know how to, oh, there's the end stream button. So I'm going to push the end stream button now. Thanks, everyone.